Welcome to today's panel. My name is Agnieszka Rabenda-Ozimek. I'm a legal advisor with 20 years of experience and over 15 years I serving game dev industry. Today I'm also here as the president of recently founded Association of Lawyers serving the video games industry, the Game Dev Lawyers Association. Today, I have the pleasure to moderate a panel discussion for you on private equity or IPO, business and legal benefits and risks. We will discuss the pros and cons of investing in the stock market as an opportunity to raise funds for a company. Issues we will consider include the speed of funding, the size of funding, and the timing of funding, taking into account the advancement of a game development. Our discussion will present the view of three parties, one of which will be the game developers. Joining me on the panel today are Piotr Bajraszewski, business development lead from 11-Bit Studios, and Paweł Wilk, CEO and co-founder of Ice God Games. The role of investor will be presented by Kinga Wacławik, partner at Erebor Capital. Welcome. From the side of legal profession, we have with us today Vice President of the Association, Kamila Dulska-Maksara, Jacek Markowski, also Vice President of the Association, and Jakub Marcinkowski, also from our association, the Game Dev Lawyers Association. Well then, let's start the discussion. First question, getting right to the point. Which is better, the stock market or a private investor?
Both and neither at the same time, because you cannot choose one. There will be some funds will invest only if your company is liquid and publicly listed. There will be some funds on the early stage that will invest only if you commit in the future for being listed. It's not the option. It's just right time for you. On the beginning, you don't need to be listed because it's too early for you. On the seed capital, you have venture funds. Later, you have private equity funds. And after that, when you are on the way to exit of that funds, for example, the venture funds wanting to sell your stocks to the funds of the next rounds, like funds who will avoid risk, because venture capital is the most risky stage when things a lot of times not going in the way you want. And then that funds want to sell, for example, for pension funds which avoid that risk because the company is already in the stable stage. And then you have to be listed, because they invest only if you are listed. Then you cannot choose one. It's both.
So from my opinion, as a developer, it really depends on what kind of stage of the company you are. If you are small, if it's your first game, you're not proven, there is no even talking about the stock market, you shouldn't do it. The whole administration, everything will be too costly. You have to focus on the game. So what you should find, it's a best angel investor who will trust you, and you will trust him and try to do and deliver this first game. If you're a mid-sized company, then you can start considering this as the probably the other option, especially New Connect, which has some pros and cons. However, this is the easiest approachable market, so you don't have to be so proven company, and we are not yet. So it's not my experience. We are not yet on the stock market. We are on New Connect, so it's difficult to say what stage we should be applying there. But start with the smallest and at least the lowest amount of the capital that you need, which helps you to prove that you can do the games. And later try to play with the bigger companies, investment companies, and the market.
Maybe the thing I may add to it is why you are wanting to be a listed company, on why you want to have an investor on board. So it's not only raising some money to the company, but also some benefits which comes from for example, being a listed company where there is a space for ESOPs. And for me, ESOPs in public companies are much better than the one in non-public companies, or a space for a partial exit for founders or these early stage investors. So for me, it's not only the money, but also the other benefits, which may cause what is better for you, for your company. And on the other hand, what are the risks for you? So we know that there are a lot of limitations, restricting investment agreements or shareholders agreements. So if you can accept it, so in that type of investment is for you. But a lot of executives in startups don't want to share it with investors. So I think for them it's better to go public, but it's not to be public. You have to be prepared for it. The obligation to disclose information, the level of the company should be much higher than only to be a startup without revenue. And you should know that having these investors of board, usually a lot of investors on stock market, is also being like partners with them. So it's not taking money and closing the company, doing everything in secret, but to disclose all the information which may be important for them, not only the good information, but mainly the bad information. So, for example, you will have to disclose the information about some, let's say, negative sale or something like that. So I think that not only the money should be taken into account, but also these other factors which may be even more important. So what you would like to achieve with your company in the next few years may show what is better option for you.
Usually I ask two questions. The first question I ask my clients is first, it's why? Why do you want to do it? Why do you want to go public? Because this is always a huge step, regardless the size of the company and the amount of the money they want to gain. But the second and most important, are you ready for the commitment? Because the most problematic thing, from my perspective, in game dev is what we call in Poland paperology, so amount of documents, regulations, fixed dates that you need to remember, regulations, reporting via EBI, SP on the stock market. So that's the most trivial and non-legal, non-business question, but this is the most important because first huge decision is, okay, let's start our own studio. Okay, I can be, let's say, CEO or just the president, vice president. I can deal with people. You can deal with technical stuff. We will manage. But the second question is, are you ready for tons of regulation for lawyers poking, 7 days. Remember, on the 7th day you need to put this report. You need to postpone something, or you need to put this into the quarterly or annual reports. So those two basic questions are the two questions that I'm asking always. Why, and are you ready? And quite often I'm like, okay, so let's wait. because then you have those, new connect regulations or main stock in Poland regulations, a little bit different, much more complicated sometimes. And they're like, oh, okay, maybe not this time. Maybe in half a year, let's meet one more time and we'll talk about that.
Okay.
Just maybe to sum it up, because I think we can all agree that the right answer is it depends, really. Our favorite answer. I know you all love it. So yeah, basically it's not only about your internal structure, what is your main goal, because I'm not saying that IPO is overrated, it's not my position, but still you should also take into account the current climate. Do you remember any successful IPO in the recent months? Because there aren't many really. So if you're just focusing on going this route, you're just wasting time basically, because if you have a successful product, you should also think about the alternatives, which is in this case a VC. So my perspective is mostly doing due diligence. So just like Kinga mentioned, it's a lot of paperwork. Many developers are marginalizing due diligence because they are thinking there is no real risk there, so we can do it later, or don't do it at all and say it's all good, it's all great. So when you do it in a manner that is not respective of the risk and you're going the IP route, I think that IP IPO is less forgiving when it comes to going it without the complete knowledge of the potential risk. And I know it's not a panel about AI, but the fact that you might be having a next big thing based on AI and you're going public, and you will go in flames because you will have litigations all around the world, then basically there's no going back, because you can delist, but I don't think many VCs will be interested in cleaning up your mess, basically.
Okay, let's go to the next question. What are the advantages of investor financing, especially in the context of sector investor or publisher? Piotr, this one is for you.
So let's go. Yeah, as it was mentioned before, it's super hard at the moment to have a successful IPO. So it's really a rare case, I think, at the moment where the studio can actually go into IPO, become a public company, and do it in a successful way. So here we have investors, and should it be a VC or maybe an investor from the industry? And that's a very good question because, of course, at the beginning, the money is super expensive. So when you have only pitch deck slides and you're searching for an investor, then probably a VC could be an option. But in general, coming from 11-bit studios, of course, I believe that investor from the industry, in general, is better because he can be also a publisher. He can also provide you actual support in terms of developing your company, not only the game. But sometimes maybe you do not need an investor at all. And that's something like going into IPO, it's a super long and stressful process that will waste months of your time and may not be a success. Going in with an investor, it's a super stressful and long process, and it can waste months of your time and can be not successful. So sometimes it's a matter of question like, are you really at this stage? Do you really need that investor? Because maybe going with a publisher, as I said, it's better option, like to finance only the project. And then later on, once you are successful and you have position of the strength, go with the investor or go then with IPO then, because to start from scratch it's super hard, and I think that's the main thing. Yeah.
Okay, Kamila, do you want something?
I can add something because there are VCs which are from the industry who is doing like only venture capital. For this industry. Like for us, we do purely game dev. We don't do nothing. And we provide you with the contacts with the publishers. We are together in Star Wars Industries, and you are our lovely publisher. Then and also having part of the stocks, because that was the part of the deal as well. And there are VCs out of the industry, like VCs who invest in all of the industries. We call them generalists. And talking with them would be so much harder than talking with the industry VC, because we understand how the games are made and how the games are sold. And if you come to the generalist VC, they don't know anything, and you have to spend time to explain them how the things work, because they could ask the question how this small game you are making can become Zelda if you give you 2 million or 3 million, 20 millions, because they don't understand that things in game dev doesn't work like that. In other industries, it's sometimes working like that. You test the project, you do it for once, and then you put more money to marketing, you get more clients, you sell more. In game dev, not with everything. Yeah, we cannot just put more money and sell more game because we add money to the game. And the process of time with the venture capital is depending how ready you are. It's not depending on the venture capital. It's depending how ready you are to take the deal and how much time you spend with our lovely friends, lawyers from here. I recommend to put like cap for that talks. It's so much easier if we give you, oh, this is how much you earn, just go to the room and find the answer. so much easier. I love you when you do it. But it's easier if you are ready. You know how the things work, that we have to explain you stuff. Like, for example, what is tag, drag, or any corporate law we want to in agreement, and how that things will work. And we will spend time with you and talk about that. And if you already know, it's just signing the contract. I invested in 3 days because they already know. But if you don't know, you have to spend time.
So maybe I will add a little bit because I have contrary observation or contrary experience from our very, 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 very beginning years ago. That it's maybe not beneficial. I 100% agree that industry investor it's much better choice, especially for the founders who didn't have so much experience in the game dev itself, so they can learn a lot, etc. So this is without doubt. However, convincing, if you are a young studio, convincing non-industry investor was, at least a few years ago, much easier than industry investor, in the terms that there was a movement and you had a game in the title of your company, and this was sexy, and it was much easier, and the industry investor wanted to know what are you actually doing, right? Not only a few slides and saying that, okay, this will be a new PUBG. So from my observations of the other companies, how it happened a few years ago and even now, it's at least in the case of the small amounts, so maximum few millions, the investor outside of the industry would be much easier to convince, faster at least, and you need less preparation for that. I'm not saying this is beneficial, for sure not, but it's easier.
Yeah, from my experience, I need to agree with that. However, it's not that, because we know how the process looks, and it's good. But the biggest trap that was, especially with the private investor outside of the game dev was, and this will be the quote, I sold 200,000 refrigerators. I think I can sell the game. And that may be a huge problem, considering that this will be your one and only investor for the next few years. And, kind of crushing 2 points of view, someone from the outside who sold 200,000 of refrigerators. And of course, I will sell that many of a game or more because, the marketing is digital and oh my God. But on the other hand, you have one in every, how much? 32 games right now, around something like this. So as always, it depends. I will always say that.
Maybe he was selling the refrigerator with the game.
Maybe.
May I add one thing? Because Paweł you said one thing that realized me that I was definitely too harsh in terms of VC investments, because absolutely yes, I think you said one crucial thing, that you got the investment a couple of years ago when there was gazillion millions of zlotys on the market, and everyone could get the investor. And I think now, you can see it around the world, all the publishers are restructuring their portfolio, which means they are killing half of the games they have invested in. And it will be harder and harder to get an investor. And I think now, actually, it's a time where VC can shine on the market, because you cannot, you can have a publisher only with slides at the moment, but it's much harder than it used to be. 4 years ago, to be a publisher 4 years ago, it was a nightmare, because each developer in the world instantly had 5 or 6 different offers on the table as soon as he finished writing an email or announcement of the we are X whatever, we started new company and we already got the investor. So yeah, now the VC, so now the startup way, so getting the VC first and then bigger investor and then publisher, I think maybe better or more popular option. Hopefully we won't end up like startups when only the capitalization matter, and that, yeah.
I think that it also relates in some way to the public companies. So a few years ago, it was very easy to set up company, prepare a pitch deck, and then you can find a lot of investors who wants to invest in your company. Now it's much harder to do.
Yeah.
And I think that these investors who invest in companies which are going to be public are have wider knowledge about the market, have wider knowledge how it works, what is important, and that not only the team is important, but also what is their track record. So I think that the whole game dev on the stock market is growing, but also the knowledge of the people who are around these industries, also the knowledge experience is growing.
And you have to understand one thing. It's not like there was like good times and now there are bad times and there will be bad times in future forever. No, the market is working like that. It's always like that. You can just check it by yourself. Just put in the Google the game dev bubble and just not search for the last time. Just put it. You will see exactly the same articles, exactly the same titles in 2018, in 2013 or 14. You will see it. It's happening all the time, and not only in game dev. There's good companies, there are bad companies going down, there are good companies going up and down, and it's always like that. And it's working for ages like that. That's why, because if something is going good, investors like private or investors like, from typical, because there are like, VCs, PE funds on the beginning, but they are still like on the market. They're normal people. They have limited knowledge. They can check it just only because you see in SP or check the article. This is like, and everything they can know about your company. They won't call you, I don't know, Anam, how our game is going, how many copies you sold. Like, imagine that. It would be hell. Then, when the companies are going good, there are more people interested. Then there are more people invest. There are more companies which are not good. Then it's coming to the bad companies. The investors lose money. They are stop being interested in the market. Then there's nobody. There is starting good companies, and it's all the time.
So it means that now is the best time to make some investments on the market.
Okay, we go to the next question. What are the advantages of going public, and what are the advantages of investor funding?
So maybe I will start. I think I'm the only one who is the supporter of the capital market, and I'm a big supporter of capital market. I think that the company should think about it in a way, not if to be a public company, but when to become one. And the two things which comes to my mind is first of all ESOPs. So for me, ESOPs in a public company is much better than in not public. You can say to your employees, okay, if you stay with us for another year, you will we will grant you some shares. You can sell it, you can hold it, you can wait for a dividend. And on the other hand, in not public companies, it sometimes looks like a ticket on a lottery. So we don't want. There is a lot of restrictions. We don't want. We are, for example, granting something which is called virtual shares. So it's even trailer shares. And additionally, for me, it's this partial exit of founders. On public market, it's very easy to do it. If you are a founder, and you would like to I don't know, buy a yacht, for example, because your company is doing great, it's not necessary to take money out of the company. This money can generate profit in the company. You can hire someone or spend it on the user acquisition, but you can sell some part of your shares to the investors on the public market. You still can hold the control over the company, but you can make some exit, earn some money. If you are a founder or an early stage investors, I think it's a great idea to have this opportunity at some point of time in the future.
So maybe I will go a little even deeper with this. It's not only about the founders or early investors, I would say at least key people in the company. So you can do exactly the same, and it's much more beneficial for them if they see the valuation, how much they will gain in the future if the company will go good. Even if you are, I don't know, want to motivate more people, even every person that working in your company, but with the different number of stocks. So this is possible for the additional benefit, and this is something that I believe can boost the motivation quite a lot. The obvious thing is also that I consider is it's easier to fast gain the new capital if you really need it, like to make a new emission of the stocks. If there will be a need, it's always possible. Maybe not in the situation and on the market that we have right now, but in general, in normal case, it would be.
On the other hand, also the fact that you have more spread shareholders, it's bigger chance that you won't have one nagging main shareholder or investor. Of course, it's a cliche, but it happens sometimes. I know, because usually I then have to deal with them. So a little bit maybe easier in terms of contacts with your shareholders. It's easier to say, hey, sorry, there is the same level of access to the information. We have additional regulation being a public company. Please wait for the report. Please wait for the annual meeting, or just ignore them. But I didn't say that. But of course, I'm kidding. But in general, it may be easier to say no or say wait than to have this hello. So how many copies we are having right now after this obvious 15th DLC right now? And you're like, Christ, okay, but you need to talk to them when you have your private investors, and of course they also should have the same access to the information. But still, it's harder to say them no, or please wait, or we will see this once a year during an annual shareholders meeting, or there's something different when you have these quarterly reports, or sometimes even more often when there is something important or otherwise good happening and you want to make it public. So that's like more common thing and just strictly social thing, but also very important when you don't need to deal with your shareholders on a daily basis, but you can be very formalized within the term access to the information and amount of the information that you are passing by.
Yeah, and following up to the social aspect, maybe more psychological one, because most of our clients are also treating us as, as people that are healing their brains, and they can share all their fears, and they can especially discuss everything that is on a more personal level. You should also answer yourself if you are ready to lift all the weights when it comes to any public speeches, public appearances. Do you have the soft skills? Because if you're working with a VC, he might help you to understand, learn the ropes, how to deal with that. If you don't have a person that has any experience, especially someone like within the management board, a CFO, and you're more on a creative side of your industry, then you will not be able to provide the business side, and you will feel the burnout pretty quickly. I've seen things, people that were doing really well, and they ended up with a one-hit wonder because they went public and they couldn't manage with all the business issues, the paperwork, you know the drill.
And for the perspective, if you're building a game, which will be like, and want to be your studio building your own games, you will be the boss. You will decide what kind of IP you are doing, what kind of titles you are building. You have to be prepared. Then at some point, you will have to go public, because it's only way for you to partially exit and still be the boss. Like, all of the big studios in Poland, 11-bit studios, CD Projekt, only Techland is not listed, but they are coming. They are coming. And they are listed in the end, because this is only way to be the person deciding what you are doing in the studio. If you are being acquired by, Embracer, the Embracer will decide what you are doing. They may let you do your stuff. They may let you. But if you are, for example, not successful enough if your game, then they will come and say, no, we have to do it a little bit differently because we have expectations. Then that's the major advantage of the game, of the IPO, of being listed, that you will stay the boss of your company. because you have to exit. Everybody have to exit in the end. It's not like you will work in your studio to the death and after when your spirit is coming and I don't know, do something in the studio. You will want to exit at some point. Your investor want to exit at some point, and this is the way how you do it. And of course, ESOP for the team, which was mentioned, and for the perspective of the investors, small investors, like, I don't know, anybody of you can go to their broker app right now and buy 11B Studio. You can buy CD Projekt. Can you buy any other studios from here, which are not listed? A little bit harder, yes? Yeah, and you have access to the information. You know how CD Projekt is doing, how many copies you can think, how many copies they sell, because you see how much they earn, because you have that knowledge. This is the advantage as well for the small investors.
Yeah, so small summary from my side. That ESOP thing, I think, is basically the only advantage. Once you are public, 4 years as we are, that ESOP, so the employer share program. I'm not sure what O stands for, but yeah, so optional. Yeah. So basically, that you can give options for shares for your employees, and if they work hard and everything will be successful, they are getting the payout after the years. It's the biggest advantage and a huge advantage of being a public company, actually, in my opinion. Regarding getting the investor, what you said, I'm not so sure, because the problem is that when you are a public company like Star Wars Industries that we bought shares in, we had to deal with the huge capitalization they had. And then you are buying you can invest in the company, but you have to pay the market price, which is pretty huge at the moment for most of the game dev companies. So that's the problem. And the disadvantages is actually what you said. It's when you go public, you are becoming a public company, but not only in formal sense, but you are becoming a public person. And you have to read all the stupid forums, you have to read all the comments. You can ignore them, but we have Bogusia from 11B Studios, so she organized the conferences with us yearly, and it's always stressful because every word we say is being analyzed by analysts, by our investors, etc. There is always a problem with being agile, which is super important in our industry, to be agile, to be able to change the project, delay the project, sign an investor, sign a partner, etc., etc. And with being a public company, you always have to think about the investors and the fact, like what they think, how can I communicate it, when do I have to communicate it, etc., etc. So it's it's another layer of problems to everything you do as a company.
Okay.
And what you said about the price for Star Wars, it was huge, because the market decides how much you earn. We cannot agree each other like, this will be evaluated like that, but you can have opposite. Your company can be evaluated smaller than the investor thinks, the other thing, because the market decides, and you have to communicate with the market. That market understand your value. If you don't do it, you don't be active, your company will be probably not noticed. And we are happy with capitalization of Star Wars.
We go to the next question, okay? From the client's perspective, when entering the stock market, what should be avoided? What is the common mistake among development studios going public?
Oh my God, I have this one, sorry. I'm probably the same. Going with precedents, please don't put into your report everything. That's the worst thing. The problem with the regulation of stock market is that even New Connect, that you need to decide whether some information is important enough that you should make it public and let know every single of your shareholders at the same time. So via EBI and SP, that yes, we have signed such and such an agreement. And the problem is that in the beginning, every single agreement is very, very important for you because it makes you run and it's exciting and it's new. But when you are on the market for the 10 year, you scaled up 10 times and you have such type of agreement signed every second or third week, you're like, Christ. And the problem is with creating precedents, because if you once make this information public, you are expected to, even via New Connect or the main market, to do it again and again and again, because you need to be, stable, reasonable entity being listed. So do not create this type of precedence. Do not go, we hire a lead programmer and he's great because he was there and there. It's really better to put one report saying that, okay, we've completed a whole team for the next half a year and we are going, full speed right now with the project. This is better than saying that we've hired, lead creative director, mid programmer, but because he has great experience and the greatest VFX guy ever. And people are doing that. And they are like, but I don't want to put this on the New Connect. But you have to, because you've been doing this for the last 3 years and you cannot do that. But it's 11 p.m. and you have to do it right now because tomorrow it will be too late because you've been doing this for the last 2 or 3 years, and don't create a precedence. Please, even for us as lawyers who need to then tell you to do it and call you in the middle of the night, and your wives or husbands are like, I hate you while she's calling. It's 10 p.m. She shouldn't be. And I'm like, sorry. What can you do? You need to do your job, Don't create precedents, please.
So to sum up, you should remain the game producer, not the report producer. Yeah? So,
Exactly.
so it's a main point. And I think that a lot of companies which are going public think that every information is important and should be disclosed. And to be clear, most of the information of the newly public companies, most of these reports are not necessary. Usually they're about some letter of intent or of term sheet, and it's not that important to disclose it. And then it's very, very difficult to find the position what should be disclosed as a current report and what can be disclosed as a press release.
So this is what Kamila said. It's basically, let's say, more forgiving case that someone is saying about the new people, etc. It's precedence. It will have consequences, but it's still, let's say, rather okay. What we have to think as being on the public company, I believe, in my opinion, was it's most important. It's our business, and we do the business. And we only report the consequences of our company, what we did in the business. We don't create the business in the public information. We don't try to pretend that we have something that we don't have, paint something which is very not important, some typical agreement which could be announced as the huge publishing agreement or any stuff like this. So the business is the most important, and we need to say only the essentials from this business and the consequences, not creating the. So this is from my perspective something that I believe it's missed a lot. That the business is first, and then we communicate. I know that you said that talking to investors is important and thinking about them. This is true, but thinking in the terms that will be actually beneficial for them, not getting gain from for what they see in this letter. So this is my belief, the biggest problem that could have the biggest consequences, because if someone is waking up at 11, okay, it's painful, but it's not so bad.
Yeah, but talking about waking up in the middle of the night and talking about business, I know it's a no-brainer, but your business is, in fact, every part of the IP that you have in your portfolio, so you should protect it beforehand. Because once you go public, you're on the radar of copyright trolls, trademark trolls. Some dude from China will register your trademark in China, and the China government will not be interested that, in fact, you're using it for quite some time because he was first, and you have to contact him and pay for basically your trademark, and that's it. And for many publishers and developers, China or any other very exotic from a legal standpoint market is important. So I cannot stress it enough. You have to secure it in every possible way. Because if you go public, some unhappy contractor that you have only an oral agreement will be gladly to contact you. And then you have informed the whole market about this dispute. We know it. A very famous writer, I will not name him, but he definitely used the fact that this huge developer was a public company. So again, I know it sounds like a self-promotion, but you have to do it.
Okay, and now to sum up, one last question. Could you give us some golden tips or pro tips for development studios looking for funding?
So I can start maybe from previous experiences. The one very, very important, which is underestimated a lot, have a good lawyer on your side. That will really.
And put the cap on the time.
It's basically the lawyer that you pay him to fight for you, to look for the holes, and it sometimes will be like this, that you really want to negotiate this contract and you want to close it. But lawyers say, hey, don't do it. It will be tricky in 2 years, 5 years, and it will be. So you have to consider this, and always think that the investor is much smarter than you and have much more experience. So they already did it a few times, and they know which will be a problem, despite what they say. There will be problems in 2 to 4 years, and they may plan to gain on this. So this is one important. Second thing from my side also, don't take the first offer, like the first person who write the check. Have at least 2 to compare, to negotiate, have some time to think about it. Then, like I would say, you will be much more encouraged to go deeper into negotiation. Maybe 2 more very small things also from my experience. The best time is it's the best to gain money, to raise the money when you don't really need them yet. So when you don't have this, I don't know, breath of the death on your neck that you have to close it in 6 months because if you didn't, you don't have the money for the employees. Don't do it. Raise it as soon as you see in the forecasting that something will be going not very good. Because it always takes more time than you expect. Like if you expect it takes 2 months, then this 2 months, last 2 weeks will take additional 3 months for negotiating, etc., etc., etc. And it's 5 months already, only assuming that you know where to go. So if you already have the connections, relationship with the other people, then it will be 5 months. If you have to establish this, go to the shows, make a connection, prove anything, then it will be much more time. So this is what I can
Kamila?
So because we as a lawyer were properly advertised, thank you. So something for the VCs and general investors, good budget and references. Don't put the biggest games into as your reference games. Be more reasonable and more humble. I didn't want to use that word, but that's the biggest problem. Even when I'm getting, I don't know, just to look at some pitches, budget plans, etc. It's very much, especially the first drafts are over. It's too much over the limit. The games that are referenced to are huge, very well-known titles. Usually sales data is on Steam Spy, which we know that right now is plus minus 50,000 copies. And it's like, oh, come on, 50,000 per $10 each. It's like very fine. But in general, good references. So then your budget can be just checked whether it's possible to at least gain something or not, finish under the line. Red one.
Kinga, very short.
Okay, there will be the thing that Kamila was talking. Not making the game. Not make the first game your dream game. Make the first game reasonable size game you can deliver with your team with this kind of money. And which will sell in copies that will make this budget reasonable. Don't make your developer dreams as a first game. If you sell first game, you can make next game, which will be better, and the first game can be the game. If that ones before will be successful, the third one can be the game, but not the first one. And from the perspective of the investors, choose your investor wisely. Choose the guy who will help you. We, for example, are really picky. We invest rarely. No. We invest really rarely. We don't take a lot of companies because we work with the companies a lot. We help a lot. We do a lot of things. That's why we don't invest that many times.
Okay, one word, Piotr.
Okay, so one word would be
Time's
take a hint. That's 3 words, I think. But yeah, basically, if you are pitching to the publishers, investors, etc., and you are not getting any positive feedback, sadly, it's bitter sour. And I think, but take a hint would be it. Sometimes you have to see the reactions of investors and publishers to your game, to your idea, to any business that you have, and if it's negative, yeah, maybe there's something behind it.
Okay, Jakub?
I think that the most important part is even if you trust your advisor or it's your friend and you trust him, go through all the documents and to know what is inside. If you don't understand something, ask for explanation. Because friendship may end, contract with advisor may end, but it's you and this investor or the capital market at the end. So it's you who should understand how it works, what is inside, and how to deal with risks.
Okay, great. Jacek?
Okay,
One word.
I'm humble, so my one word is humble. But lawyer up, change the mentality that you're using a lawyer only when dispute is around the corner, because this is a Polish mentality, and we have to get rid of it. But seriously, we are the good guys. We are all about the fun, but honestly, it's a teamwork, and if your lawyer understands that, and he's not flexing muscle, but he wants to work for the team, then you're in for a treat.
Okay,
Thank you.
that was great. It was very informative. Thank you all very much for joining us for the panel today.
Thank you.